Today I'm going to be showing you how to identify the key levels in malicious support and resistance. So this is the first of the series and let's get right into it. So first of all, when you want to properly identify key levels in malicious support and resistance, you change to your line chart first. We have three types of level in malicious support and resistance. The first level we have is the A level, which is right here. The A level, this is an A level that looks like a peak at the top of a mountain. So A level, let me mark another one. You have another A level right here. So any level that you see that looks like a mountain, the top of a mountain is the A level. So you're seeing this is an A level too right here. So these are just three A levels that are marked up. Then the next level we have is the V level. The V level looks like a V. So let's look for them on the chart. So this is a V level. Anything that you see on the chart that looks like V, the inverse of the top of a mountain, that is a V level. So this is another V level right here. This is another V level right here. Let's go again. This is another V level. These are A's and V levels. So when you come to your chart, the first thing you do is to change your chart from your candlestick to your line chart. Change it so that I can get a clearer picture on the A's and V levels in your support and resistance. Now, resistance are roofs in the market, while supports are floors. So as you are seeing, any line that you draw, let me put it in layman's terms. And when you come to your chart, any line that you draw or any A and V level that you draw, and you notice that current price is below that A or V level, you can tag that the levels that you've marked as your resistance because the market is below it. Now, any levels that the market is on top or the market is above is known as your support. So you're saying this level here is your support because the market is above that current level. So any level you mark on the chart and you notice that the market is above it is your support. And when you see that the market is below certain levels, you can tag those levels as your resistances. So this is the basics of, malicious support and resistance, the key levels. Now, the next key levels that we're going to be looking for is the open close key levels. Now, these open close key levels, you can see them as these bendings in the line chart. So what do I mean? If you are seeing this place is bent, has an angle. So this is an open close, a type of support or resistance. This one too, if you are looking here, this is bent also at this point, is bent here. There's a type. Another one too is here. Is a type. Another one too is here. Now, this has their various representation on the candlestick chart. So let's just mark it first on the line chart because you have to know how to mark it on the line chart because the line chart will actually make it clearer. That's why I'm using the line chart first. Now, once I show you on the line chart, I will show you on the candlestick. So I just marked 3 right now. Now let's go to the candlestick. Let's change the color so we don't get confused with the A level. Let's change the colors to blue so that we can actually see them properly. Okay, there's another one we marked. Blue. Yeah. So if we come to the candlestick chart, let me change it. Candles, you're going to see that these are support and resistance. Now, if you look at these things, this candle closed here and this second candle opens. So the midpoint between the closure of this candle and the opening of this candle is known as a kissing candle. Is also a type of support or resistance. Now we can look at this one too. I marked. You can see the accuracy from the line chart. So this one closed here, this one opened here. So this is a kissing candle. The kissing candle. Let's look at the third one that I marked. Okay, this was because of market opening. So the market did some, I won't call it manipulation, but did some weird stuff around here. Probably because it was a new week. So it was weird, but can classify this as a kissing candle. As long as you saw it on the line chart, it is valid. Now, if we come to the normal candlestick chart, we can still mark it. But preferably mark on the line chart. So, as you are seeing right here, the market gave this kissing candle also here too. If you are seeing the market reacted from this kissing candle right here, look at it, just tapped it and moved. have a great massive move. Let's look for another kissing candle. This one is another kissing candle also, as you're seeing right here. It's another kissing candle too. Let's check. So these things are everywhere on the chart. They are everywhere on the chart. You can just go to the chart and then try to identify them. Now, this is a very current situation. It's a very this is a very interesting situation, because as you are seeing, there was a gap between these two kissing candles. So what do we do? This is why I said use your line chart first, because on a line chart you're actually going to see these things better. So if you go to the line chart, let's change it to the line chart. You see, I drew two points, and this our line merged with only this bend. As you're seeing, it came down, then gave us a bend here. So we're going to delete this one. This is our real SNR zone. So I'm just going to stop calling support and resistance, because of how it's too long. So this is our new SNR zone. So as I said before, we have three major levels: the A levels, the V levels, and the kissing candle. Any level that is above current market price is known as your resistance, and any level that is below current market price is known as your support. Now, as you are seeing, I have drawn a lot of support and resistance on the chart. Now, in our upcoming videos, I'm going to be teaching you how to navigate and select which of the support and resistance we are going to be using, because we're not going to be using all, depending on the situation we're in, or depending on what the market is showing us. So there are a lot of support and resistance where the market reacts from, and there are a lot where the market does not react from. So as you're seeing, for example, this was an A level. This was an A level that the market reacted from, and we had a V level here. We had a V level right here, and we had a V level right there. We had a V level right there. Let's use the line chart. As you're seeing, I marked it perfectly. In case you are wondering, this is the V level and this is E level, marked perfectly. So you might be wondering, okay, the market reacted from this A level and then it didn't react from this V level. We are going to be going into all this in future classes. Please hit the like and the subscribe button. I'm going to be teaching you guys how to trade profitably. If you stay with this channel consistently, I promise you that in under 6 months you'll become profitable. I promise you that. In my next video, I'm going to be teaching you guys how to get the appropriate direction of the market, how to know when the market is going to buy, how to know when the market is going to sell, how to know when there is a reversal, and how to know when there is a continuation.